October marks the end of the Major League Baseball season, and in the spirit of sports, let me ask you one question. What does baseball history and disability income insurance have in common? Before I dive deep into that, let me invite you to click that subscribe button right now and also like this video to help me grow my channel. I want to give you some perspective of why it's so important to protect your income and what a difference it makes in the lives of those who recognize that it's important versus the ones that don't. For example, Babe Ruth was 25 years old in 1920 when he joined the Yankees. At that time, he was set to earn the highest income, earning $20,000 a year in annual salary. Back then, the world was going through the Spanish Influenza, a global pandemic that killed 1/3 of the world's population. No different than what we're seeing today with the NFL and other leagues, Babe was, freaking out, and with good reason. Back then, a $20,000 a year salary was the equivalent of $271,930 of today's money. That's just barely over the average salary of a surgeon in the US today. So Babe is like, how can I protect myself that if I catch the Spanish influenza or I get a serious injury and I can't play in the season, that I would still get my income? After all, he was set to be the highest paid baseball player. Well, Babe caught the Spanish influenza twice. Yikes. So he understood that earning the highest income did not make him invincible. On the contrary, it made him, quite vulnerable financially. So along came the Hartford Insurance Company with a disability policy that ensured that Babe would receive $200 a week in benefits if he couldn't be out there in the field trying to surpass his own home run record, which he did. Babe remained healthy that season, thank goodness. But the point is, he was cautiously smart, and he set a precedent for other leagues and other sports to consider the importance of having an income replacement strategy. These days, a disability income insurance policy is almost a standard practice when it comes to negotiating contracts with athletes, because illnesses and injuries are too common when it comes to sports. Franchise owners want to make sure that after investing millions of dollars into an athlete, that they can recoup some of that if the athlete is injured and can't play. Most athletes start out really young, but if they have a good team of advisors, they're not going to hesitate to take out a disability income insurance policy to protect not only their salaries, but also their endorsement deals. Because many of them will lose those endorsement deals if they can't play. After all, those marketing efforts are really highly correlated to how they play in the field. And if they can't play, you get the deal. And so did Leonard Fournette's parents, who bought two $10 million policies prior to him being drafted from LSU. But a lot of these guys are rookies and probably never imagined that they would get their hands on such big amounts of money. And a lot of them don't have the right team of consultants, so they can't fathom the idea of paying $20,000, $30,000, $40,000 for insurance to protect their millions of dollars. I get it. Most people watching this video are not athletes or celebrities, so you may be thinking, how does this apply to me? Let's go back to Babe Ruth. Earlier, I said that $20,000 back then is the equivalent of over $271,000 of today's money. The average Major League Baseball coach makes between $200,000 and $360,000 a year. You know who else makes around that much money? Anesthesiologists, orthodontists, obstetricians, surgeons, some CEOs, some CFOs, politicians. Yeah, let's not talk about that one. If you're bringing $200,000 a year in income, that means you have an earnings potential of $4 million over the next 20 years. But you know what can bring that to an immediate halt? A serious illness or injury. Even if you bring $100,000 a year in income, that is $2 million over the next 20 years that you're going to leave exposed because you don't feel like paying $100 or $200 a month in insurance to protect that you get at least 60% of that. If you think $200 a month in premium is a lot of money, how much is $2 million actually worth to you? The point of this video is that young athletes like Babe Ruth, Leonard Fournette, and even Marquise Lee, and you're gonna have to look that story up, they value the importance of having an income replacement strategy, even when they get paid millions of dollars for playing 1 or 2 seasons. What I'm trying to say here is, doesn't this plan make even more sense to you, considering that it would take you so much longer to equate the millions that they make? Let me know in the comments if you agree with me or not, and what part of this video you like the most. And in case you forgot earlier, don't forget to click the subscribe button. Thanks for watching, and I'll see you next time.